From the morning reading. Today marked about the 134th trading day of 2015, and we're still stuck in a narrow range that has constrained both the upside and downside of the S&P 500 all year. So far this year, there has not been a single day where the S&P 500's year-to-date change as of the daily closing bell was greater than 3.5% or less than 3.5%. That has never happened in the history of the index. Prior to 2015, there was never another year where the plus or minus range for the S&P 500 this late into the year was under 4%, and only 5 years where the S&P 500 was never up or down more than 6%. And reviewing the charts, the maximum range, and using the maximum range or plus or minus 6%, 134 trading days into the year, you can see that the precedents were that the range-bound back and forth action, while frustrating for many traders, history has paid patience off, and the second half of the year has been up. Also from the morning reading, Wall Street analysts were lowering their expectations for earnings and price reactions heading into the earnings season, and they've been continuing their pessimism a week into it. Such pessimism has led to positive stock returns, especially surrounding the start of earnings seasons. Going into Tuesday, more than $13 billion flowed into the four main ETFs, the SPDR, Qs, Diamonds, and IWM. That's the third highest figure in the past 5 years, behind mid-September 2011 and late December 2014, which was likely related to year-end adjustments. Extreme flows have been a decent contrary indicator over the past year, which would be a minor short-term negative for stocks at this point. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:30 a.m. Central Time, and I'm recording this in preparation for the market day of July the 16th, 2015. Full disclaimers at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Let's dive in and see just what we're dealing with from our overnight action. We're a little bit up. All four of the broad market U.S. indices are up at least 1/3%, with the NASDAQ the strongest at 0.4% at the time of this cut. Crude oil was up about 2/3%, euro down about 2/3%, the bonds down about 0.4%, and gold down about 1/3%. And overseas action, Germany was the hottest market, up 1.5%. China and Hong Kong were both up around 0.5%. Japan a little bit more than 0.5%, about 2/3%. United Kingdom also up about 0.5%. So generally bullish action all the way around the world in all the primary markets. In terms of macroeconomic reports, obviously today is the weekly employment claims. You also have Fed Chair Yellen testifying for the second day, though yesterday, it's my understanding she was mostly just reiterating what she had given in a speech a couple days prior. Doesn't seem to be anything that's going to be shaking things up coming from this process this time, but you just never know, and loose lips, as they say, sink ships. Also, Philly Fed Manufacturing Index is released today, as is the Housing Market Index. And remember, we're watching the Housing Market Index as an important tell. If housing can get some really good action, that could be the kind of thing that pushes momentum in the broad market and goes up. If housing continues to have any weakness, then that could be something that would stall any kind of bullish action on the broad market. So this one's listed as an orange report, but many people are following this as an important potential tell as to just where the market might be going from this range-bound activity. In terms of Friday, we have CPI, building permits, core CPI, that whole group, plus the preliminary University of Michigan Consumer Sentiment Report after the market opens. In addition, you have an FOMC member, Fisher, speaking, so kind of keep that in mind for the upcoming day. In terms of volatility, fairly quiet yesterday on that front, and you see the IV percentiles 14.7, 14.25, very similar to the day before. Short-term VIX 12.40. Notice the skew here started climbing up a little bit, though not quite even to our caution area. Caution is 125, but certainly it's been edging up, so that's something to kind of continue to keep an eye on. No standard deviation moves were put in yesterday, and we're slightly below normal in terms of standard deviation moves on the S&P 500, with only 3 in the last 2 trading weeks. In terms of our regular daily report, we are still phase 5, the break of diagonal horizontal support. We're looking for the establishment of not just a higher high, but a higher low. To change that status, but we are, in big picture, we're back into the prior range where we spent months, and that would seem to be the primary definition of current market phase opinion. IBD status is still uptrend under pressure. Accumulation distribution on the S&P is a C minus, and on the Nasdaq a D. So signs of weakness there as well. GMI index did improve, and actually this should be in black now. It is a 6 out of 6 with a buy signal as of 7:14. Stock charts, decision point scoreboards improved yesterday, no change for today, but obviously we've seen a number of those signals improve. In terms of the intermediate term market posture, we are in position opinions, long side portfolio exposure at 50%, active trader is at up to 100%. The market posture is full out bullish at this point. See, the S&P has crossed above 50, as has the Dow and the Nasdaq. So very strong improvement in the last 4 trading sessions have brought all these all the way from bearish all the way into the bullish camp. Russell's right on the verge of joining them. Obviously, we'd like to see this Nasdaq and the Russell stronger than the S&P kind of be the leaders, and it's a bit concerning that the Russell is the laggard here. Hedge warning status remains level 2. We do continue to have some concerns, but those are starting to lessen, and we may see that continue to drop if we can put on continued bullish action. One of the things to keep in mind is that we're up against some rather important resistance areas. So we certainly, from pot odds standpoint, we're closer to the top of the range than we are the bottom of the range, unless we can truly get through this pseudo double top, but certainly the top of the range, the prior highs. Unless we can get through those tops, it's hard to believe that there's much more opportunity to the upper than there is room to the downside at this point. This has been a very complex trading range that has occurred for some period. We had this trading range, which then led into this trading range. We had a tickle of the top, a tickle out of the bottom, but basically we spent 95% of the time inside this trading range. Where we go from here, of course, is the magic question. But right now, pot odds are there's a lot less room to the top than there is to the bottom, so being very careful with the initiation of new positions as well. And we take a look, we mentioned the Russell was weaker. Well, it has not been able to get through the resistance of this ascending range channel that we had on here, and once it broke down through, it came back up, tapped the bottom, fell, came back up, and has tapped the bottom again and has fallen. So this may be the leader leading the rest of the market down for some retracement after the big moves that were put in over the last several days. So we'll have to continue to watch that. Pre-market action, of course, today is bullish, so it may be able to muscle up through that. NASDAQ, something of a small body. Certainly we talked yesterday about how these bodies were getting smaller and again smaller with a false up day, and that is to say that close to close it was up, but the action within the day between the open and close was down. So a false up day, something of a warning sign there on the NASDAQ. And on the Dow, very small doji, also a point of indecision. So you can see what we're dealing with today as we look at these various markets. Also small body on the SPX, and not actually quite, it would seem, a bearish harami, but certainly at the very least something of indecision, whether that's a spinning top or a doji. It certainly marks indecision after these three very pronounced bullish days. So from all that, we've got this hedge level 2. We continue to see a relatively high distribution day count at the S&P 5, NASDAQ 4. We have continued improvement, though, in the risk aversion indicators. We've already had 2 go to risk on. 2 others are on the edge of crossing over to be risk on. And only the last one here is still at risk off, clearly, but it is potentially starting to roll up. So quite a bit of improvement in those indicators. No changes in the special opinions for today. We're still with the option income strategies. VIX is in the acceptable window. Technically, the volatility conditions are acceptable. Consider the position sizing reductions, and that we are at increased risk for increasing volatility as we're near the top of the range, and that may play into what you do. You might be selling bear calls off the indexes or other similar instruments. Cover call strategies. You might also be looking to consider position size reductions and a distribution count of 1-to-1 with the in the money and out of the money strikes. And then put selling, also conditions acceptable, but the consideration for position size reduction until the market has confirmed this bullish posture. That should be enough for today. If you are appreciative of what you're hearing here, you find this helpful to your trading, that you like the channel, and in fact you can subscribe to our Falcon Global channel and be alerted when new content goes up each day. Obviously we post this as the market preview generally around 6:30 to 7 o'clock in the morning Central Time. As well, if you found us on Twitter or StockTwits, that you retweet us or like us, these kinds of things are greatly appreciated. More information about what we do can be found at the website. Disclaimers as always. Hit the pause button if you need more time to review this, and we'll see you back here tomorrow before the market opens with the market preview. Good trading.